Assalamu alaikum students. Am I audible? Can you guys hear me? Assalamu alaikum. Can you guys hear me? Please do acknowledge. I can't hear you guys. I can't see your message. Uh, so I hope you are not the only one who can hear. So like all of you can hear me. Thank you for the feedback, Salma. Umar, Sharyar, Hassan, Anesthesis, Jonetta, Ikra. Can you guys hear me? So it sounds like today that it would be going to be a one-way communication from my side because either you guys are not listening or in a listen only mode doing your other stuff as well. So thank you for the feedback, Anesthesis, Ikra. Still, the feedback is from less than 50%. Well, I'm not uh, going to wait further for this. Rather, let's start this just to share with you. In the last class, we had a discussion like where I was sharing the areas which I am going to cover for yesterday and today, and I shared the areas which Sarzia would be covering on tomorrow and day after tomorrow, right? Just to reiterate the thing, just to revise the thing. So I'm going to cover the income tax, corporation tax, and self-assessment related areas. And Sarzia would be covering inheritance tax, VAT, and capital gains tax, basically the MTQs and MCQs area of the examination. Yesterday, we did a complete uh, exam paper of September 21. Today, first, I like to take your questions. If any one of you want to clarify any kind of your query, I would love to hear. And then again, we'll be starting to solve the questions. So first of all, I am going to hear from all of you side, appreciate all of your feedback. Anything, any one of you want to discuss, to clarify from income tax, corporation tax, tax planning, any of these area. So I respect your views, but at the moment I'm looking for the queries from these areas from your side. questions, queries from these topics. Let me write the name of these topics. Income tax, corporation tax, and tax planning. No question. Any question, anything any one of you want to clarify, any query? I love to hear questions. You can unmute yourself and ask the question, or if you're comfortable, like if you're not comfortable in speaking, you can type your questions. Both would work for me. So how you are going to ask? Are you going to unmute yourself and going to ask the question, or are you going to type? Okay. When you are asked under tax planning where an individual is self-employed later changed to a company, do we have to all NICs 1, 1A, 2, and 4? So, anesthesias, to your question, be clear on one thing. When class 1 NIC is applicable, when 1A is applicable, when 2 and 4 is applicable. Class 2 and 4 NIC is applicable on self-employed individuals. Self-employed individuals. Self-employed are either sole traders or partners of the partnership. So these two gentlemen are uh, self-employed individuals. So on these two gentlemen, class 2 and 4 NIC is always applicable. Okay. Then when class 1 and 1 ANIC is applicable, so class 1 and 1 ANIC is applicable when an organization employs any person. So if a company is organization and it employs the director, CEO, CFO, manager, labor, so on, all such things, the company is supposed to class 1 employer NIC and 1A also. But employee is supposed to pay class 1 NIC only. You should be clear the difference between the 1 and 1A. 1 is applicable on the gross cash earnings, whereas 1A is applicable on the net taxable benefits. I hope I answered your question. And any question, please? Anesthesias, again, I hope I answered your question. Yes, Maria, any question from your side? Thank you for the question. A good point to discuss. I hope this question is in regard to self-assessment of individuals, the reduction of payment of account, right? So let's start the discussion. Hold on. Sorry. So exactly. When the reduction in payment on account is applicable. So the reduction on payment on account is only applicable when the taxpayer believes his current year income tax liability would be lesser than the prior year. So if this is 21-22, which I'm talking about, if I believe like for my current year liability, it would be less than the prior year tax liability, then only it is possible for me to reduce the payment on account. Point number one. Uh, for this, like my current year liability would be less than the prior year, I need to have a proper rationale for that. Why I am saying that my current year liability would be less than the prior year. So I need to have a proper rationale for that. If I have a proper rationale for that, like why I believe so, and HMRC agrees, like to they allow me to reduce the payment on account, then my payment on account will be reduced to half of the current year's estimated tax liability, half of the current year's estimated tax liability. And in case of loss, for example, in the previous year, I have a profit. In the current year, I am forecasting a loss. And in case of loss, there will be no tax liability at all. In such situation, it is allowed for the taxpayer to pay no installment. Like he claims that there will be no tax liability at all. And since there will be no tax liability at all, Hence, there will be no payment on account. I hope that clarifies, Maria. Ikra, if we are calculating capital allowances, which cars are when qualifying for super deduction for FIA or AIA? So, from a capital allowance perspective, they are categorized into two categories. One is called commercial vehicle and another one is called motor vehicle. What is commercial vehicle? Commercial vehicle is any vehicle which has a defined list, what is included in the commercial vehicle. So if it's a commercial vehicle, it attracts it attracts AIA, first year allowance, the super deduction as part of corporation tax. But if it's a motor vehicle never ever get AIA. Motor vehicle never ever get super deduction as part of corporation tax. They only get FIA if low zero emission car. They only get 18% or 6% capital allowance. I hope I answered your question. If the QC to Maria, if the QCD is unrelieved, then yes. So what is unrelieved QCD? QCD unrelieved is if you can't adjust with your own profits, then yes, it can be transferred. But till I recall, the transfer of QCD to group companies is not part of TX, that is part of ATX. So in ATX, we do discuss this, but in TX, till I recall, there was no concept of transfer of QCD to group companies. If there is any one particular question in any of the exam kit question, that could be due to error of the exam kit rather than intentional. Any further question, please? So Maria, like I said earlier, so BADR and investor, I don't mind explaining them, but these two areas purely belongs to the capital gains tax. So keep your question reserved for tomorrow or day after tomorrow session. Suggest you to take this up in tomorrow session. Like I want to confine myself to the three mentioned areas. Dear students, no further question. If no further question, then I will be starting the past exam papers, specimen papers kind of stuff. So I believe no further question from your side. Fine, fair enough. So let's start with the uh, past the practice at the CB platform, which is like uh, I s- okay, to Salma Zamir, I strongly suggest to attempt pre-mocks uh, before the exam. It's not for the TX only, it's for across all of the exam, so that you have an idea where do you stand. Okay. uh, you're exactly standing with respect to knowledge, with respect to time management. That's why I highly suggest to attempt a pre-mock. uh, I need to check, Daniel, because it sounds to me like this change is for fiscal year 21-22. I just need to check you are looking for the relevant one. So if it's relevant, then that's a fair point. Then uh, to Salma, then there is an improvement required type situation. If you are getting if you are getting 58% just a week, for example, 10 days before the exam, it means the improvement is required. So uh, we did the September December 21 exam yesterday. Any of the exam do you guys want to propose me to do? You guys want me to do, or do I pick it up on random basis? Last one, March, June 22. I okay. So my personal view, keep this like I I would love if you guys keep this paper for yourself, because this is the latest paper available at the platform. So you guys would have an idea how the examiner is thinking these days, or what are the, you know, in fashion kind of things for these days. Once you will be doing it at your own, uh, along with the time management, that's much better for you guys. So that's my honest and humble view. So I don't mind if I have to do any of the paper, but that's the honest view for the this paper, March June 22. If you have still any query, you can reach out to us over the WhatsApp. So that's not an issue. Like, we are not unreachable, we are always reachable. So I'm fine with the practice exam one. So I'm going to start with the practice exam one. I hope you don't mind this, Salma. I advised this thing yesterday and advising the same today as well. Please, at least once before the exam, do read all of these instructions, at least for like at least once. Okay. So at the moment, like I said, my main agenda is the section C type questions. So I'm sorry. I'm heading towards the navigator. After navigator, I'm directly heading towards the section C. Let's start this. Okay. This scenario relates to one requirement. What is that one requirement? Joe is the managing director and 100% shareholder of OK Joe Limited. Sorry. So he is managing director and shareholder of OK Joe Limited. He has always withdrawn the entire profits of the company as director remuneration. Someone was asking about NICs. So in this regard, OK Joe Limited is supposed to pay class 1 employer NIC on the director remuneration, and Joe himself is supposed to pay class 1 NIC on the director's remuneration. Just to give you a reference, on property income, on interest, dividend, and pension income, there is no NIC. On capital gains, there is no NIC. He has always withdrawn the entire profits of a company as director remuneration, but given a recent increase in profitability, he wants to know whether this basis of extracting the profits is beneficial or not. For the year ended 5th April 22, OK Joe Limited taxable total profits before taking account of director remuneration are 65,000. Okay, so 65,000 is the total taxable profits. After allowing for employer class 1 NIC of 6810, Joe gross director remuneration is 58,180. So what is 58,180? So it's like company is earning the profit of 65,000. Out of this 65,000, company is paying class 1 employer NIC of 6810, and the rest of the amount 58,190, rounding gap, 58,190 will be given to Joe as director remuneration. The figure of employer NIC of 6810 does not deduct the 4,000 employment allowance because OK Joe Limited, Joe is OK Joe Limited's only employee. This is not available. So I hope you guys recall, in two instances, NIC employment allowance is not available. In two instances, NIC employment allowance is not available. One, if there is only one employee in the organization, like if it's a corporate, if it's a corporate employer and there is only one employee in the organization, which is labor, manager, director, CEO, all discussions resides with the same person. Uh, if there is only one employee in the organization, NIC employment allowance is not available. And there is one more situation where NIC employment allowance is not available. Can anyone tell me that situation? Can anyone tell me about that situation, please? So no answer, a complete silence. And the second situation, when the NIC employment allowance is not available, when the last year class 1 employer NIC exceeds 100,000, then in current year NIC employment allowance is not available. So this is one reason for non-availability of employment allowance, which is perfectly fine. I was asking, in general, not a situation specific, in general, there is one more reason where NIC employment allowance is not available. Okay. What I'm supposed to do over here? Calculate the overall savings of tax and NIC for the year ended 5th April 22. If Joe had instead paid him gross director remuneration of 8,000 and dividends of 46,170. Calculate the overall savings of tax and NIC for the year ended 5th April 22. If Joe had instead paid him gross director remuneration of 8,000 and dividends of 46,170. Notes are very important. You are expected to calculate income tax payable by Joe, the class 1 NIC payable by both Joe and OK Joe Limited, and the corporation tax liability of OK Joe Limited for the year ended 5th April 22. You should assume that the rate of corporation tax remains unchanged. Okay. Two situations. Situation number one. All of the profits will be extracted in the form of director remuneration. Second, the out of the profits of 65,000, 8,000 will be extracted as a salary and 45,000 will be extracted as a dividend. 8,000 will be extracted as director remuneration and rest of 46,170 will be extracted as a dividend. Okay, and be very clear. You are expected to calculate income tax payable, class 1 NIC payable by both Joe and OK Joe, and the corporation tax liability of, so in total 4 things, right? Let me write it as, let me caption this as extracting the profit as director remuneration. If he extracts the profits as director remuneration, then on his salary, 58,180, this would be his total income. $12,570. Taxable income. On this taxable income, 37,700. 45,610 minus 37,700. As a result, income tax liability amount 10704. Then class 1 employee NIC. For class 1 employee NIC, and please do read the exam instructions at least once before you go to the exam in detail properly, please. Tax tables, what value of tax will be available on what page, you would be clear from that perspective also. Because if you are not clear which information is available on which page, at the end, you will be ending up in searching the information in the exam, which is like easy get thing. And obviously that would lead to waste of time. CR questions help. So I suggest again, at least for the one time, do look all of these CR questions help. By the way, I opened this up to look for the class 1 employee NIC rates. 9568, 0. 50270. And so this is like 0%. Sorry, total class 1 employee NIC. Then class 1 employer NIC. Class 1 employer NIC is given, which is 6810. Can anyone tell me what will be the corporation tax, please? Can anyone tell me what will be corporation tax? I can see the 4 feedbacks. Director remuneration less NIC into 19%. That's the fair thing. I love the way you guys are thinking. So what's the turnover of the company? The turnover of the company is 65,000, right? Minus 6810 minus 58180. And if I take the 19% of this, it would be my corporation tax. Do you guys agree on this approach, or do I need to change any of my calculation? Do you guys agree with my approach, or do I need to make any amendment? Okay, like you can make it round to 0, because like I said earlier, there is a rounding gap only. So that is approximately to 0. Okay, but let it be. So I'm not going to change it to 0. So this is the total amount of taxes under this approach would be 10704 of income tax, 5402 of so this is the total taxes under current approach. Mixed remuneration of mixed remuneration of salary and dividend. Under the mixed remuneration approach, salary would be 8,000, dividend would be 46170. Considering no other source of income, so as a result, the taxable income amount 41,600. Now let's start taxing these. So this 2000 is due to dividend exemption. Then 37,700 minus 2000. then last one, employee NIC. Employee NIC is applicable on the gross cash earnings. So gross cash earnings is like 8,000 multiplied by 0%. So that works out to be 0. Same thing would go for the class 1 employer NIC. Corporation tax 65,000 minus 8,000 minus class 1 employer NIC is 0. If there would be some amount, then I would be deducting that, right? Last thing, the 46,170 of dividend, am I supposed to deduct while calculating corporation tax? There is only one feedback. Can I have more feedbacks, please, around this? I noted this piece, Daniel. Can I have feedback from others, please? Uh, to Salma, I will be responding to your question shortly. So now you guys are on a right trajectory. Now your comment is correct. We do not deduct the dividend paid. I'm not talking about received. I'm talking about dividend paid from the corporation tax. Okay. So hence whatever amount of dividend is paid, there is no corporation tax implications. That's the rule based answer. If you ask me the logical feedback of this, the logical feedback of this is the dividend is paid from the after tax profits. So since dividend is paid from the after tax profits, hence no impact of dividend paid on the corporation tax. Hence no impact of the dividend paid on corporation tax. I hope all of you guys would keep this statement in your mind. Okay. So, as a result, total taxes under this approach amount Am I supposed to calculate total tax? No, I'm supposed to calculate the overall savings. Any question from this? Do let me know, else I'm good to move to the next piece. Sorry, next question, not piece. Let's move. So, Salma, you want overview from from my side? Okay. So, in this question, I'm supposed to calculate the three things which I have highlighted over here. Income tax, class 1 NIC payable by employee and employer, and corporation tax under two situations. If whole of the profits are extracted as a director remuneration, as in like salary, or in the form of mixed remuneration. Mixed remuneration as in like 8,000 in the form of dividend, sorry, salary, and 46,000 something amount, 46,170 as a dividend. So what will be the tax consequences, or these three tax consequences? And then I'm supposed to calculate the overall tax savings. So first of all, I calculated the income tax. First of all, I calculated the income tax. If whole of the amount is withdrawn as director remuneration, uh, then I calculated the class 1 employee NIC, class 1 employer NIC, and corporation tax. Then I calculated the total taxes and NIC. Then I put a heading of mixed remuneration of salary and dividend. Under the mixed remuneration approach, I calculated the income tax liability, which is 3945. I calculated the class 1 employee NIC, class 1 employer NIC, and corporation tax. And then I calculated the total taxes. Then I took the difference of these of two total taxes, and the difference of these two total taxes are my overall tax savings. Welcome. Any further comment, any further feedback, please? I'll move to the next piece. So I guess let's move to the next piece. This scenario relates to 4 requirements. So for this part of the question, there are 4 requirements. Ashura has been employed by Rift PLC since 1st January 19. She has also been self-employed since 1st July 2021, preparing her first set of accounts for the 9-month period ended 5th April 2022. The following information is available for the tax year 21-22. Employment. During the tax year 21-22, Ashura was paid a gross annual salary of 56,000. On 1st January 21, Ashura personally paid 2 subscriptions. The first was a professional subscription of 320 paid to HMRC approved professional body. The second was a subscription of 680 to a health club, which Ashura regularly uses to meet Rift PLC clients. Ashura was not reimbursed for the cost of either of these subscriptions by Rift PLC. Okay. During the tax year 21-22, Ashura used her private motor car for business purposes. Ashura used her private motor car for business purposes. She drove 3,400 miles in the performance of her duties for Rift PLC, for which company paid her an allowance of 55 pence per mile. During the tax year 21-22, Ashura contributed 2,800 into Rift PLC HMRC registered occupational pension scheme and 3,400 into gross personal pension scheme. Okay. Self-employed. Ashura tax adjusted trading loss based on her draft account for the 9-month period ended 5th April 2022 is 3,300. This figure is before making any adjustment required for advertising expenditure of 800 incurred during January 21. This expenditure has not been deducted in calculating the loss of 3,300, the cost of Ashura office, and third, capital allowances. Now I need to look what's there in the capital allowances. As part of capital allowances, Ashura runs her business using one of the 5 rooms in her private house as an office. The total running cost of the house for the 9-month period ended 5th April 2022 were 450. No deduction has been made. No deduction has been made for the cost of office and calculating the loss of 3,300. On 10 June 21, Ashura purchased a laptop computer for 2600. On 1st July 21, Ashura purchased a motor car for 25,600. The motor car has CO2 emission rate of 117 gram per kilometer. During the 9-month period ended 5th April 22, Ashura drove a total of 9,000 miles, of which of which 2,500 were for self-employed business journeys. Other information. Ashura total income for the previous 4 tax years is as follows: 17, 18, 1100, 18, 19, 10, 800, 19, 20, 48, 800, 2021, 53, 400, or 54, 300. So before I start the question, one formal feedback from my side regarding the question. The question is like very wide with respect to the concepts, with respect to the testing. A lot of things are tested in this question. Should we start this question? Thank you. I don't know why I am feeling like my internet is responding slowly. First requirement: state 2 advantages for Ashura of choosing 5th April as our accounting date rather than a date early in the tax year, such as 30th April. Do you guys have the concept, like, can I have the responses of all, please? Do you guys have the concept of choice of accounting date? Which accounting date to select? Either 30th April or 5th, either 30th April or 5th June. Sorry, or 5th April. Okay, I have the one feedback. Thank you. Can I have more feedback? Like, are you guys conceptually clear with the implications for choice of accounting date? Okay. Uh, I noted your feedback, Salma. Anyone further, please? Okay, I noted your feedback. Mm-hmm. Good one, Daniel. That's correct. Can you guys see my blank screen? Thank you. So here I'm going to discuss the factors which affect choice of accounting date. This is like as part of a subpart of a question or as part of MCQ. I can see the increase in examinability of this topic. There are three factors which affect the choice of accounting date. What are those? What are those three factors which affect the choice of accounting date? The three factors are: first, level of overlap profits. Second, time to pay tax or liquidity position. So these are the two very broad factors. Now, what is covered under both of these factors? Under first factor, the overlap profit, the overlapping months in every profit calculation, they follow a defined methodology and in fact a defined pattern they follow. And what's the pattern? What's the methodology which they follow? So for example, if this is my fiscal year, which starts from 6th April every year, ends on 5th April next year, if my accounting period ends on 31st December, the distance between 31st December to 5th April, the distance between the difference between 31st December to 5th April would be my overlapping months. I'm not talking about the amount of overlapping profit. Rather, my discussion is on the overlapping months. Okay. You can check out this phenomenon in any of your question. If the year end date is 31st December, your overlapping profits would be of 3 months from December to 5th April. If your year end date is 30th September, for example, the gap between 30th September and 5th April is like 6 months. So your overlapping profits would be of 6 months. If your year end date is, for example, 30th June, then your overlapping profits would be 9 months. These can be prorated accordingly, interpolation or extrapolation. You can do it accordingly, but this is a high level thing. And based on this, I can very confidently say, if accounting period is same as fiscal year or 31st March, there will be no overlapping profits. This is the first factor. So based on this factor, which year and date is good? 31st December is good, for example, or 30th June is good. If I look into this, I would comment 5th April is best because under 5th April, there will be no overlapping profit, right? Whereas under 30th June, for example, there would be overlapping profits. Right? This is the first factor. Now let's discuss about the second factor. The second factor is time to pay tax or liquidity position. What is time to pay tax? What is liquidity position? Time to pay tax or liquidity position is this is my accounting period. Okay, sorry. This is my fiscal year, which starts on 6th April. Make it for this year. Let's talk about this year. 6th April 21 and ends on 5th April 22, right? If my year-end date is, for example, 30th June 22, sorry, 30th June 21, it means as per the current year basis, 30th June 21 is in the fiscal year 21-22. Whatever profits you earn in this period would be referred as profits earned in fiscal year 21-22. In the same way, if your year-end date is 30th September 21, based on the current year basis, these profits would be referred as profits of 21-22. In the same way, if your year-end date is, for example, 31st December 21, these profits will still be referred as 21-22. If your year-end date is, for example, 31st March 22, these profits on current year basis would still be referred as profits of 21-22. The tax of fiscal year 21-22 has to be submitted by 31st January after fiscal year, i.e. the tax return for fiscal year 21-22 has to be submitted by 31st January 2023. Imagine if my year-end date is 30th June 21, how much time would I get to pay the tax? So I'm getting somewhat 19 months to pay the tax. If my year-end date is 30th September, I'm getting somewhat 16 months to pay the tax. If my year-end date is 31st December, I'm getting somewhat 13 months to pay the tax. If my year-end date is 31st March, then I'm getting somewhat 10 months to pay the tax. With respect to tax payment, is it good or bad to have more time? Is it good or bad to have more time? Always good time is beneficial. Why? First of all, there is some opportunity cost of cash. I hope you understand. What is opportunity cost of cash? Like you can invest the cash into the bank and could have earned some income. So in the comparison of this, you have 9 extra months. Second, you have time to arrange the cash. Third, your accounting period ends on 30th June. You would be knowing about your profits in a day or two, like how much you have earned in this year versus 31st March. You will be knowing how much you have earned in this year on 31st March. As a result, as a result, as a result, as a result, under 30th June, you have more time to plan for the tax. Whereas under 31st March, you don't have any such time to plan for tax. Plan for tax as in you can plan out for personal pension, gifted donation to extend the band to reduce the tax liability. So you have more time to plan that tax. Now, if you look into the time to pay tax element, if you look into the time to pay tax element, it says 30th June is good, 31st March is not good. It says it concludes that 30th June is good, 31st March is not good. Because under 31st March, less pay tax, etc., etc., etc. Taking a pause, I'm done with the discussion. If there is any question or feedback around this, please do let me know. Thank you, Salma, Zainab. Okay, let's move back to the question. I hope you guys can see the question. So now it's Umar, it's your thing to change your. So no, we are not done with the question. We are discussing the background at the moment. Like, am I audible as before? Because I can see the disconnect in my headphones. So again, to back to you, Umar. So we are not done with the question. We are like discussing the background, the concept understanding in detail. So two advantages. Advantages of 5th April as compared to 30th April. First, there will be no overlapping profit. As accounting period is same as fiscal year. Since accounting period is same as fiscal year, no basis period adjustment is required at time of business start and or cease. Is the explanation clear? Okay. Uh, Perfect. Thank you. Let's move on to the next requirement. The next requirement, calculate Ashura revised tax adjusted trading loss for the 9-month period ended 5th April 22. I'm supposed to calculate tax adjusted trading loss. So for here, revised tax adjusted trading loss. Trading loss draft, allow me to use the word. Draft trading loss is by the amount 3,300. Then advertising expenditure. Is it like allowed or not allowed expense? Or was there any 6 months type of rule with this? Isn't it like 6-month rule? For example, just asking. Yeah, yeah. I hope you guys remember this thing. She has been self-employed since 1st July 21 and she's incurring this advertising expenditure in January 21. Exact. Uh, is my screen visible? Uh, it's probably something at your end, Salma. I suggest you to log out and log in again. So advertising expenditure, is it allowed or not allowed? The answer is it is allowed because the 6-month rule, the 6-month rule was for the VAT, not for the trading income. And just to remind you, with respect to trading income, For manufacturing business, pre-trading expenses up to 7 years are allowed. And for service business, up to 4 years, up to 3 years are allowed. Whereas, so that is entirely different from VAT. And that's the point I want to trigger, that you guys are mixing up. So be confident on your knowledge, what's in your mind. Okay. The cost of Ashura office. Cost of Ashura office. The cost of Ashura office is 4350 divided by 5. And this 4350 is already for 9 months. So no need for month apportionment. So the cost of one room is like 870. Then on capital allowances. So let me calculate on the capital allowance piece. And this would be my revised trading loss. Right? Capital allowances. Rather than calculating it formally, I'm calculating it bit informal way. Okay. Laptop would qualify for AIA 2600 into 100%. Then WDA on car. WDA on car would be 25,600 is the cost of car. Considering the CO2 emission, the capital allowance would be 6% multiplied by 9 upon 12, because I'm calculating it for 9 months, multiply by the business private use element. The business journeys are 2,500 out of 5,500. At the moment, no need, but an advice to all of you guys, please do give a good care about when to give a good care when to month apportion, when to not month apportion, kind of stuff. $8094. So my revised trading loss is 8094. That's correct, my dear. Sorry, Omar, I missed your question. Let me first respond, Daniel. Daniel, AIA is not available on motor vehicles, please. So it's a motor vehicles, that's why AIA is not available. So yes, I agree with your AIA planning point. Although, isn't 6-month rule applied on services? So Umar, I hope I guess you missed my point where I was referring that the 6 month principle was for the VAT, that's not for the trading income. And you're so to answer your apology, which you are referring, should always be followed. Done. Let's talk about the part B of the requirement. Explain why it would not loss relief under the provisions give relief to a loss incurred in the early years of trade. You should assume that tax rate and allowances for the tax year 21-22 applied in all previous fiscal years. Why opening year loss relief is not beneficial? Why opening year loss relief is not beneficial? Can anyone tell me why it's not beneficial? So it's a start. Why should not Ashura be claiming the opening year loss relief? Under opening year loss relief, the loss is adjusted with the total income of last 3 years. With the total income of last 3 years. So the loss of 21-22 would be first adjusted against 18-19, then 19-20, then 20-21. Accordingly, if we adjust the loss with 18-19 total income, there would be no tax savings as all of the income would already been covered by the personal allowance. Any question on opening year loss relief is not beneficial point? Any question on this? Please do let me know. So yes, we have a different we have different options, but if you read the requirement C, explain why it would not be beneficial for Ashura to claim loss relief under the provisions given relief to loss incurred in early years of trade. So this is specifically ask me to discuss on these lines basically. Welcome. Assuming that Ashura claims loss relief against her total income for the tax year 21-22, calculate her taxable year. What will be tax for this year? If she follows this methodology, uh, to adjust the loss from current year, then what will be her uh, salary 56,600. After salary, it's subscription of professional association paid by Ashura. That's a deduction from employment income. Then what to do with subscription of health club? Is it allowed? Not allowed? Is it allowed or not allowed? Correct. Expenses which are wholly, exclusively, and necessarily incurred for the performance of duties are allowed only. Then that's correct, all of you. Thank you. During the tax year 21-22, Ashura used a private motor car for business purpose. She drove 3,400 miles in the performance of her duties for Rift PLC, for which the company paid her an allowance of 55 pence per mile. By looking into the reimbursement rate, I can say here it would be net mileage benefit, and net mileage benefit would be net mileage benefit. I hope correct. During the tax year 21-22, Ashura contributed 2,800 into Rift PLC occupational pension scheme. Occupational pension by Ashura is 2,800. 3,400 is the personal pension. So personal pension extend the basic rate band and high rate band by the gross amount. As a result, employment income amount, since there is no other source of income, so the same amount would be considered as my total income. From this total income, I adjusted the loss from current year. The loss amounts 8094. As a result, net income amount less personal allowance taxable income. This is what the question asked me to calculate the taxable income. Any question around this, please? Fine, fair enough. Let's move on to the next part, the last question of this. This scenario relates to two requirements. Fine. Mabel is a serial entrepreneur regularly starting and disposing of businesses. So what Mabel do is starting and disposing of business. On 31st July 21, 10th Limited, a company owned by Mabel, ceased trading. On 1st October 21, 11th Limited, another company owned by Mabel, commenced trading. So like Mabel, one company is ceasing and he is starting another company. Tenth Limited. For the 4-month period of trading ended 31st July 21, 10th Limited had a tax adjusted trading profit of 52,400. This figure is before taking account of capital allowances. So this figure is before taking account of capital allowances. Second, on 1st April 21, the tax written down value of the company's main pool was 12,400. On 3rd June 21, 10th Limited purchased a laptop computer for 1,800. Fine. On 31st July 21, the company sold all of the items included in the main pool at the start of period for 28,200 and the laptop for 1,300. None of the items included in the main pool was sold for more than its original cost. Do you guys understand the implication of this last statement? None of the items included in the main pool was sold for more than its original cost. Like, what does this statement makes difference to me? What does this statement makes difference to me? I'm not sure, Salma, honestly. This is administration can tell better about this. So you can drop a message into the group to the admin. They can respond it, but I have no idea about it. Apologies for this. No, Daniel. So are we talking about capital gains in this overall discussion? The last statement means from a trading income perspective, it basically means, I hope you guys remember that for capital allowance, while recording the disposal, we always have to record disposal lower of cost of proceeds. So for such thing, it means that always the proceeds is lower. None of the item is sold for more than its cost. Uh, is this point clear? I'm just talking about last line. So it means for every situation, the proceeds is lower. And since for every situation, proceeds is lower, so do not give a do not worry about lower of cost of proceeds phenomena. On 31st July 21, 10th Limited sold the company's freehold office building for 180,300. The building was purchased on 31st May 2016 for 151,334, and its index cost to December 17 was 164,500. During the 4th month period ended 31st July 21, 10th Limited let out one floor of its freehold office building, which was always surplus to the requirements. The floor was rented at 1,200 per month, but the tenant left owing the rent for July 21, which 10th Limited was unable to recover. The total running cost of the office building for the 4-month period ended 31st July 21 were 6,300, of which one-third relates to the let floor. The other two-thirds of the running cost have been deducted in calculating 10th Limited tax adjusted trading profit of 52,400. During the 4-month period ended 31st July 21, 10th Limited made qualifying charitable donations of 800. 11th Limited operating profit for the 6-month period ended 31st March 22 is 122,900. Depreciation of 2580 and amortization of leasehold property of 2000 have been deducted in arriving at this figure. It means I have to add back this depreciation and amortization piece. On 1st October 21, 11th Limited acquired a leasehold office building, paying a premium of 60,000 for the grant of 15-year lease. The building was used for business purpose by 11th Limited throughout the 6-month period ended 31st March 22. On 1st October 21, 11th Limited purchased 2 motor cars. The first motor car cost 12,600 and has CO2 emission weight of 45 grams per kilometer. This motor car is used as a pool car by the company's employees. The second motor car costs 13,200 and has 0 CO2 emissions. This motor car is used by Mabel and 45% of the mileage is for private journeys. On 1st October 21, Mabel made a loan of 100,000 to 11th Limited at an annual interest rate of 5%. This is a commercial rate of interest and no loan repayments are made during the period ended 31st March 22. The loan was used to finance the company's trading activities. Let's look into the requirement. Calculate 10th Limited taxable total profits, not augmented, not corporation tax liability, taxable total profits for the 4-month period ended 31st July 21. Any thought process, anything which you guys want to ask or discuss before I start this question? I repeat, any thought process, anything which you guys want to ask before I start this question? Can you guys hear me now? Uh, Thank you, uh, Jonetta. Capital allowances. With respect to capital allowances, opening balance at a start of period is 28,200. Then the company sold all of its item. The main pool was 12,400. Sorry, 12,400. On 3rd June 21, 10th Limited purchased a laptop for 1,800. I hope you remember the period in which business is ceasing. There is no AIA, there is no capital allowance. Only one thing is available to on plant and machinery, which is the balancing adjustment, nothing else. So that's why I'm only considering the balancing adjustment, nothing else. Fine. Disposals. 28,200, 1,300. So disposals amount 29,500. As a result, pool balance 15,300. So that would be referred as balancing charge, and as a result, carried down would become balancing charge, as a result, revised trading income amount 67,700. Then, during the 4-month period ended 31st July 21, 10th Limited, 10th Limited let out one floor of its. Okay. The property was let out for 4 months. So 1,200 multiplied by 4. But the tenant left owing the rent for July, which 10th Limited was unable to recover. So it means it's we are talking about doubtful debt, or we are talking about confirmed bad debt. We are talking about confirmed bad debt. So I record it as an expense. The total running cost of the building for the 4-month period ended 31st July 21 were 6,300, of which 1/3 related to the let floor. Running cost Trading income 67,700. There is some capital gain also. Capital gains. Capital gains is disposal proceed, which is 180,300 minus indexed cost 164,500. Capital gains. As a result, total income less QCD by the amount 800. Taxable total profits 84,200. Anything to ask from this, please? Okay, Umar. After capital gains, I make a sum of all of this to arrive at the total income. Then I deducted the QCD to arrive at the taxable total profits. And this is the thing which is exactly asked in the requirement. Let me move to the next question, please. The last question maybe. 11th limited tax adjusted trading profit. So here I'm supposed to calculate tax adjusted trading profit of 11th limited. Tax adjusted trading profit. Operating profit is 122,900 have been deducted. So add depreciation, add amortization by the amount 2,000 less lease premium amortization. I will be calculating this thing shortly. And after this lease premium amortization, with respect to point number 3, capital allowances. On 1st October 21, Mabel made a loan of 100,000 to 11th Limited at annual interest rate of 5%. Loan interest. So what's the amount of loan interest? Sorry. So loan interest. So what's the amount of loan interest which I should be recording over here? Keep remember one thing. All of these details are for 6 month. Keep this thing in your mind. Loan interest. 100,000 loan, 5% interest percentage multiplied by 6 upon 12. So loan interest is like 2,500. And since the loan is used for trading activities, that's why I'm referring it as trading loan. Then it would be my tax adjusted trading profit, right? Then working one, lease premium amortization. Lease premium amortization is basically taxable premium. The taxable premium is by the amount 2% multiplied by n minus 1 multiplied by premium amount, which is like 60,000. And taxable premium is 60,000 minus 43,200 is my taxable premium. Then 43,200 divided by 15. So for lease premium amortization, capital allowances. On 1st October 21, 11th Limited purchased 2 motor cars. The first motor car cost 12,600 and CO2 emission of 45 gram per kilometer. This motor car is used as a pool car. The second motor car costs 13,200 and has 0 CO2 emissions. This motor car is used by Mabel and 45% of the mileage is for private journeys. Car one, okay. Obviously, opening balance would be nil because the business just started. The car purchased for 12,600 recorded into the main pool. The second motor car cost 13,200 and has zero CO2 emissions. This motor car is used by Mabel and 45% of the mileage is for private journeys. Car 2. Car 2 purchased for since it's a low emission car, so all of the amount is transferred to the then the total of main pool so the capital allowances amount I'm done with the question. If any one of you have any kind of query, please do let me know. Yes, my dear students, if there is any question, please do let me know. Perfect, perfect. Thank you, Daniel. Thank you, Ikra, for the feedback. I would really appreciate the feedback of others also. So that's it from my side for today. If still uh, any one of you want any kind of question, any kind of query, please do let me know. Thank you. You know, this is what I can do in this very limited time period of 5 to 10 hours, like 5 hours to me and 5 hours to Sarzia. So this is the only thing which we can do for you guys. Daniel, yes, there is a tip for this, and I will tell you the reason why I am smiling on this thing. The tip to remember dates is, so if you look into the exam kit starting pages, you will find a summary of key dates type of thing. I hope you have noticed that piece, right? If not, please do it now. Do, for example, do make a copy of those, like highly suggested. Do write all of those dates in your own notebook on a separate page at your own. Paste those pages in your room where you at least look at 3 to 4 times a day. For example, it could be mirror, it could be your cupboard. uh, jokes apart, it could be your washroom door, paste it over there so that at least you look at those tables 3 to 4 times a day. This is the only way to memorize those dates, like such type of phase, not this is such type of phase. And the reason being I was smiling for your this ask is like when my elder daughter, when she was in first grade, she was learning her mathematics tables, that table of 2 and 3. This is exactly what my wife did with her. She copied the tables on her wardrobe and mirror so that she continuously watches it, and like eventually, as in like in a shorter period of time, the tables were in her mind. Your call, so you know better, like what works the best for you. I even on a serious note, one advice could be you can keep it as a changing wallpaper of your phone. I hope you understand changing wallpaper of your phone. But the first point is write it in your own words, as in you can copy paste, but do write it at least once. Welcome, Daniel. So, guys, thank you very much for being with me. Best of luck. Still, you guys need any kind of help, you guys. Jonetta, I believe the same. That's why I always advise to all of my students, even to myself as well, when I'm studying, to write the stuff, because uh, in my view, the written element has more retention as compared to just the verbal element. Well, once again, thank you guys. Best of luck for your exam from my side. If it's still any confusion, feel free to reach out. Raising the hand is your responsibility, importantly. Thank you. Take care. Bye bye. Allah Hafiz.
Allah Hafiz, sir.
Hafiz. Anesthesis. Good to see you joining the class. Thank you.